The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. I posted a chart of the cute little pig. That is the icon today for the Chinese New Year, the year of the pig. And we certainly want to pay close attention to that. And we need to take our hats off today with a strong salute from Ruby, because Ruby had the lunar thing going on pretty good yesterday when she was talking to us about the June piggies. And we're going to bring this up and show you, because June piggies had one heck of a run, folks. That's 3 cents in piggies, almost 4 cents, and that is just about too large, $2,000. So hats off to that. If you happen to buy that, make sure that you put your stop at your break-even point. It opened slightly lower, which is what you like to see. So I will put the stop at around 76 and let her rip to see if it's going to work, because that's an ABCD pattern and a beautiful 61% retracement, spot on the June hogs. And we still have that problem. Well, we don't have it, but the Chinese are still having problems with their disease that they're having in the herd that is going on over there. We've had a couple of really interesting ones today. I should bring up this footsie here, because we have a really nice Gartley that is forming here in the footsie. In fact, we have such negative signals across all the stock indices in damn near every country, in almost every country, that it's really something. You got the ABCD here and the footsie right at the 61% retracement. It's also, if you'll look real closely, it's a perfect 50% retracement from the high that we made back in August. So that's a really, really big one. But the one to me that is absolutely the most important, and I don't know if it's the most important or not, but hold on here. Somebody's trying to alert me to something. Well, okay, that's thank you, David. Okay, let's take a quick look here. This is the one that's interesting, folks. Let's take a quick look here at what happened yesterday with this spike high that we had here in the NASDAQ yesterday. We got up to the, this is hard. You can't make this stuff up. You got to the exact 61% retracement up there at 69.98, and you broke 60 handles. You went from 69.98 all the way down to 69.28, and that was the exact 61% retracement. Now, this is the new moon. Yesterday was the new moon. Today's the start of the Chinese New Year, which won't affect us too much, but it's still an important astrological sign, so we'll see if that's going to mean anything or not. But there's a lot of stuff happening here. If we look at the, just give me this last one I wanted to talk to you about. This is my 2 cents worth, by the way. Remember, these are all patterns. It has nothing based on fundamentals or any of that kind of stuff. But if you take a quick look here at the Dow Jones Industrial Average, this is just an hourly chart, and it only goes back about 3 weeks. But you can see the 3 drive to a top pattern that we have going on here. And if you wanted to really defy human nature and go look at the Dow Jones Industrial Average yourself, you'll notice that Dow Jones Industrials yesterday, or actually sometime early this morning, hit the exact 78% retracement of the high from September 1st. So that's a big one. And we do have these cycles that are coming together right now, but a lot of things are happening that make this thing line up pretty good. The bond market still, to us, seems like it wants to go lower. I'm not sure how much lower it's going to go, but it's got a lot of things, on its plate to tell you that it's got a really good chance of, breaking down quite a bit. You'll remember yesterday we talked about the cocoa, the hot chocolate. That happened to be, it opened here again. It opened slightly lower than it did on Friday, and that was around that 21.75. It promptly rallied up to 22.50, closed at 22.14, and that's a very substantial move in cocoa, folks. So if you bought the cocoa, put your stop at break even, probably around 21.80, somewhere around that, and let it ride, because it's a pretty wide-ranging bar. That's well over $1,000 the first day, so you don't want that to go to a loss. You're basically in a free trade. The best way to handle that, if you bought that and you're not paying a lot of attention to it, is to don't pay attention to it. Don't even have it on your watch list. Don't even have it on your monitor. Have your stop in at the market and watch something else. Watch how hogs and cattle are trading. You know, don't even mess with that. Now, something really big is going to happen on Friday, folks. We're going to have Mr. Z on both Thursday and Friday, and Mr. Z is going to be talking to us about these reports that we've not gotten from for the past, I think it's the past 7 weeks or so, he told me, on supply, demand and stuff, exports and all this other stuff in the grain. So we could be looking at huge monster moves in some of these things in the grain markets. And as you know, we've been relatively friendly to these grain markets for quite some time. Let's take a quick look here since we're just watching. We'll start out here with the, I'm still looking at March corn, and I really need to, I got to switch and get over that into July this week here. But they all look pretty much the same. And if we look at this corn chart, we're trading pretty much exactly where we are right now. But if these reports come out and they're extremely bullish or extremely bearish, we could see a really big move out of this trading range between October and December, in the in these grains. So we really need to pay really close attention on Friday. The report comes out at 10 o'clock Chicago time, 11 o'clock Eastern time, and that'll be something that will be pretty exciting too. Here's one that we're watching here through our good friend Mr. Cy Monley from Sylvia's Financial. This happens to be the wheat here. And you'll be able to see here that we've been in this tight trading range again from December through January. So we're getting ready to come out of here. We got planning intentions coming up pretty soon. A lot of things happening. So Mr. Z will be my guest both Thursday and Friday. We're going to talk about some of the things to be expecting, and we'll see if these things go. Well, finally, we want to look at the soybean complex. And the first one we're going to take a look at, of course, here is March bean. I will be switching to July and November beans as we come into the next letter, because we're getting ready for those key months, because that's the growing month, July, and the harvesting month is the November. But if we take a look here at the March soybeans, which are the spot soybeans, they've been actually pretty strong since these things with China have been going on. We've had higher bottoms all the way through here, and if we should get a good 30 or 40 cent break into that level around 8.75, I'd be a really strong buyer of beans. But we'll be watching the July. That's what we want to be watching, because those are the ones that will be the growing ones. The ones we have right now are the ones that are already in the bin. So that's a key thing to really pay close attention to as we look at these things, getting ready for this. A lot of reports coming in on Friday. It'll be so much it'll take them a whole day to digest it all, would be my guess. So we'll see. So if you did the pork and bought the pork bellies, if you bought the June hogs, put your stop at break even, 7,600, and if you bought the cocoa, put your stop at break even, about 21.80. That's what I would do. So we'll take a break. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I wanted to bring out a couple of things. I mean, I don't know if these mean much or not, but, you know, a lot of people put stuff on the internet and, you know, we look at it and sometimes we study it and sometimes we don't. But here's something that somebody published here. I received it from 3 people. That's the only reason I'm bringing it up to your attention here. And this is, they're making the analogy here between what happened in 2000 and 2001 with what's happening right now. They're showing here that this January 2001 rally was a month-long rally. Folks, we had a month-long rally here coming off of December 31st, but folks, they're looking at a monthly chart here, or excuse me, a weekly chart, and then they're referring it to what we have going on now. That's like, you know, comparing bananas to grapefruit. You really can't do that. You know, that's one of the reasons why the astro stuff is a little bit of intriguing, because, you know, we do have this new moon and apogee yesterday, but, you know, I really don't believe you can do stuff like that. And the reason why I say that is because all of these markets act alike. If you just took off the X and Y axis of what you were trading and what price it was, nobody could tell you what it was. It would be impossible because they all look alike. All the markets ever do is go up, down, or sideways, A, B, C, D up, A, B, C, D down, and A, B, C, D sideways. That's really all they're ever doing. And what we're trying to do is to try to pick a spot here or there that looks like it gives you a better chance of winning rather than losing. That's the bottom line of what we're looking at. Since we're talking about some stuff like patterns and things, let's take a look at one that we've been on our watch list this week, and that is the crude oil market. if you'll notice here, when we take a look at this long-term daily crude oil going back to September 1st, you'll notice that we were looking for a 382 retracement to come in there at around that 55.55. The high was 55.71. We broke all the way down to 53.23, and then we had one heck of a rally in this stuff overnight. It was a very large move on percent basis in the crude oil. I'll bring this up to your attention here because this is something that we were actually, watching yesterday, and that is the fact that, after we made that high up at that 55.71, we went all the way down to 53.25. That's a $2,000 move, and then we rallied up to what we thought was going to be the 61% retracement at 54.80, and we sold it there. We put our stop above the 78% level, but folks, we went up to the 78% level last night and hit it spot on at 55.15, right on the money, and we dropped well over $1.50 since that time. So crude oil is acting like natural gas. Of course, natural gas is dead in the water right now, but it'll come to life again, but we'll watch it a little bit later. Right now, there's not a whole lot happening with it, but keep an eye on that one. That's going to be an interesting one to watch because crude oil does have a lot of things going on with it, and it's something that is certainly tradable. And they also have, for those of you that trade small, they have an E-mini contract that is really pretty active. It's a lot better than most of the E-mini contracts. Well, not counting the S&P and stuff, but the mini contracts for the crude oil do pretty well. So that's another one to sort of pay close attention to. That's what we're watching. Now, there's a holiday, of course, because of the New Year in China. But one of the ones that we really need to watch, well, I'll be watching this tonight, of course, is if we'll take a look at the Hang Seng Index. This hasn't traded since Friday. The volume in it's pretty good, Peter. I know someone that trades it, and that's how I know that the volume's in it pretty good. He really remarks that the fills are great, so that's it. Because, well, crude oil is okay. It's just that unless you have deep pockets, you got to risk about 80 ticks in the crude oil. That's $800 because it moves. Well, just today it's moved $1,500. That's equivalent to 30 handles in the E-mini S&P, and it takes all day for the S&P to do that. We do that in crude oil in an hour. So that's the main reason. But the margin on the crude oil, more bangs for the buck. Well, now that natural gas is very, very cheap, but you get more dollar. We get more dollar profit per risk in crude oil than just about anything else because the margin is so small. You're talking about a contract that's worth around $55,000, and they're only asking $2,600 margin. So that's a really good risk reward ratio for getting your money at play. So that's what we're watching here. Okay, now I wanted to bring up this Hang Seng because this is another one that's real interesting to watch here. So far, we closed on last week on Friday at 27,930, I believe, and the high that we had on that Friday, because it opened sharply higher, was at 28,100. So if we gap up sharply, I mean sharply, above 300 points, this is going to really break that bearish pattern that we're seeing here in the Hang Seng Index. But let's be a little bit careful where we are right now, folks, because I've posted so far yesterday and today bearish signals in the emerging markets, in the Chinese market, in the Hong Kong market, the one we did today in the FTSE, and we already did the one from the DAX yesterday. So all of those countrywide, we're seeing negative patterns all across the board as we come into this new moon that we had yesterday. Maybe it doesn't do anything, but by golly, that looks like a real interesting one to pay attention to, but we'll see. But, we've been straight up since December 26th. Look what we did in January. This was I think it was not quite a record, but nearly the best January in the history of the stock market. So we'll see. Marshall is telling us that apogee is today. Thank you, Marshall. You're absolutely correct. One day away from the new moon. So thank you very much. It is also, I believe, the Chinese New Year. Tomorrow, folks, is a great day. This was the day that Ronald Reagan was born. It's his birthday, February the 6th. That was really good. One of my fondest memories of China. I'm going to say it again because it was so much fun watching it when Mr. Reagan passed away. It was, I believe, June of 2004, and I was in Beijing. And they had, on the colonnade there, where all the embassies are in Beijing, is really beautiful, where all the mansions are. They asked the countries to put their flags at half-staff, and every country did, with the exception of France. They continued to keep their flag up. And you'll never guess what the Chinese government did. They shut off the water and the electricity, and it was June, and it was hot. And you'll never guess, the next day, the flag came down at half-staff. So that's what we're watching. Okay, we'll keep an eye on it. And let's just move on, and we won't get into politics. And we'll move on to the next one here. Okay. Let's move on to the next question that someone had, and that was oh my gosh, where did it happen to it? Oh, here it is. Very good. Let's get this up here. We want to bring this to your attention here. This was yesterday. I posted this, and they wanted to know what went wrong. This was the pattern that I was looking at coming into that new moon yesterday. We had the same pattern in all the indices. And we went down a little bit, and then we came roaring through here like it didn't even exist and went a great deal higher. You don't stay short through all of that, folks. Once it makes a new high there, there's something seriously wrong. So you look at it for the next day, and that's what we're looking at right now, is to see if that's going to happen today, because we hit a lot of those numbers today, the day after the new moon. So we'll see. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim swim banner on the front page of TFNN.com.
We have Rich Anderson of Anderson Capital Management on the line. Rich, how you doing this morning, buddy?
Doing great. Good morning, Larry.
Well, how's the weather up there? Is it 60 below or 60 above?
Well, if you've got ice skates and like to skate in the parking lot, you can do it.
Oh, my goodness.
we had rain, and then it froze, and there's a quarter to half inch of ice everywhere other than where it's been heavily salted, which is only the main roads.
Wow.
It's treacherous.
Rich, what's the story about what's going on with these Chinese tariffs? Do you get any feedback at all from anyone that gives you an idea? I mean, the grains seem to be holding up relatively well through all of this. Do you know anything or have an opinion of this stuff?
Well, I don't, I'm not included in any conversations, but what I told you a week or two ago, I think is still the case that, the Chinese can't afford a 25% tariff. That would kick in March 1st, so you got to get something done. And Trump needs the economy to be doing better. They need their economy to do better. The intellectual property and all the technology type things is going to take some time to create. So I believe that the Chinese strategy is purchase and promise. So they purchase things like soybeans and frankly, they need pork. They've actually, on the Lunar New Year, suggested that Chinese people doesn't eat less pork, because they have a serious issue in that regard. So they're going to promise to do things about intellectual property and technology transfers and that kind of thing. But I doubt that they'll be able to get that done. But they're going to purchase more, I believe, in order to get our government to stand down temporarily again and push it out more.
Okay, well, so you still think there's a chance that they could do some type of an agreement here between now and the 1st of March?
Yeah, but it won't solve all the technological issues because they're very complex. But our commodities may be a beneficiary. It's what I'm saying. It should be helpful to commodities. And a disaster, in my mind, would be if either side can agree to anything.
Yeah. Hey, Rich, we just had a 61% retracement in June hogs. They broke about 8 cents, down to that, 72 level, I believe. 75 level. And then they've had a pretty good rally. How could they sell off with all this stuff that's going on with the hogs? I mean, it seemed like the news was so bullish that you couldn't possibly have got a sell-off in the hog market. What was going on over there?
Well, we have still a reluctance of the Mexicans to buy our pork while we have the aluminum and steel tariff kind of a deal. I think that's what's going on, Larry. That's my belief. And, that's just another issue that has to be solved.
I hate to put you on the spot here, but you talk to a lot more people than I do. What's going on with this Canadian thing, with the spy stuff, with the Highwall, electronics and things? That's really dangerous stuff that's going on there.
Well, and that goes back to technology and how Huawei. Yeah, that Huawei thing is a big sticking point, and it's tit for tat with the Chinese and the Canadians, and that rolls into our technology and how the transfer of intellectual property and the theft of intellectual property. And by the way, they're not the only country that does that. I mean, look at, as an example, Argentina and with Monsanto and soybeans. And if you're a farmer and you plant soybeans because of the technology, you have to sign something that says you're not going to save those beans and use those beans as your seed beans next year. You're going to buy seed beans from Monsanto again. Well, in Brazil and Argentina and South America and most of the rest of the world, they don't necessarily recognize those things, and they do it anyway. And they had gotten the government to tax any beans that were exported that showed that DNA. And then the new president last year said, forget about it, So this is an ongoing problem in many facets besides technology, intellectual property, because the technology in a kernel of seed corn or a kernel of bean seed is incredible. It really is.
One other thing, Rich, is that we're going to have a segment on Thursday and Friday because we have the grain report. We have a crop report, I believe, on Friday,
Right.
But we have not received any major reports here during the time that the government's been under not working. Is that correct?
Well, they're just like the commitment of traders report. They keep feeding them out. So there'll be another one on, there's 3 of them this week, and they're just catching up for the weeks when we were closed. I was talking to Rick about that yesterday, and this report on Friday will be the first ag report of consequence, and so people are not willing to stick their necks out too far in front of that.
Well, I can certainly understand that. Well, listen, one other question that I have is this weather that we're having here before the planting intentions and stuff, will this be a factor of what's going on with all the freezing that we have across the Midwest?
I don't think so. No, it's. I don't believe it will have any effect whatsoever. Did you get the chart I sent you this morning, the analog year 01, where we bottomed in Christmas Eve and then rallied up into the end of January, early February, kind of like this year?
Yes, I did. I sent that out. Yes, it looks very interesting too.
Yeah, that's I think it's something to keep your eyes open about.
Okay, and cattle have been up here for this 127 level for a long time. I mean, this is a big-time record. So they're ever going to see a sell-off in the cattle market?
Well, it's tough for the front month to get sold off because the numbers aren't that overwhelming, and every time that's a market where the weather events make a difference. The yards are in bad shape; they're muddy. The cattle, and it's cold, so muddy and cold, the cattle don't gain as well, although they're gaining better than you would anticipate given the conditions. But and another storm, I mean, we're expecting snow tonight, we're expecting snow tomorrow, and in the feed belt where they're feeding cattle, weather makes a difference, and that's why the front month's staying up. But, the back end December is 117, that's $10 discount.
Yeah,
the June
that's
is
true.
117.20. That's a $10 discount. But the front, you can't play with the front because the weather could really spank you.
Well,
and
that's for
we saw
sure.
that sell-off last week, but that's a lot about get-down day. The first notice day, and you have to be down below 600 contracts to get that kind of thing. Most people don't need to worry about that, but the big traders, they had to get down, and you saw that reaction last week.
Hey, listen, buddy, I want to thank you for being on the show. We'll have you on again as soon as we start getting some more information from the U.S. Department of Agriculture about some of this crop stuff, because we've had, 4 or 5 years of great crops, so this might be the outlier event where things don't work as well, so we want to watch that very, very closely.
Well, keeping like in Australia, in the last several days, they've had 2 feet of rain in some areas.
Whew.
One Bloomberg reporter was twittering a picture of an alligator at the end of the driveway because there's that much rain in the streets.
Wow. Holy cow.
So there's unusual activity all over the world, let's say.
Yeah. Hey, Rich, thanks for joining us, buddy. We'll talk to you later, pal.
All right, trade well.
All best. Bye-bye. We'll be right back, folks. 877-927-6648.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. 9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, we're back, folks, and we have Mr. Z on the phone. John, how are you doing today?
Hey, Larry, thanks for having Rich on. I always enjoy having him speak with you, learn something new.
Absolutely. What can I do for you, my friend?
Wanted to ask you about the British pound, please, Larry. If you could do two things. One, assess the pattern, and two, give me guesses. By way of background, back in December, then, and effectively a 1st of January double bottom, the British pound bottomed at about the 125 level, and that was that Fib 786 support mark on the weekly charts that we're all looking at. And it rallied. And more recently, it was that Tuesday, January 15th. And that was the day that Prime Minister May faced a no-confidence vote and survived that vote. And that very day, the British pound pulled back to under 127, making a higher low, and then rallied up to 132. Okay, and I caught part of that, having speculated a rally away from 125 was likely. I've been flat for a number of days now, and we've pulled back from 132. We're at 129 3/4. And I'm just so confused about what Brexit is. I have no thought I can have any confidence in upon what might transpire to drive this over 132 or back to 125. My question is, do you have any guesses on that question?
Ah, John, this is one of the things that I'm a real expert at, is guessing. I'm probably as good as anybody you'll ever talk to on guessing, John. The patterns I'm okay with, but guessing, oh God, am I good at guessing. The problem is I'm only right about 40% on the guesses. I posted a chart of the 4-hour chart of the British pound. You notice we had that big ABCD up there that was, tremendous, 78% ratio on the daily charts, perfect ABCD since January. It stayed there for several days, so you could get short around that 132. We just made our first objective this morning here at the 130 level. That was a 382 retracement, and we've been as low as 129.75, John. And if you go back you were referring to that date back on the 17th of January. You'll notice we went right back into that zone area. So we went back and touched that high level that we made back there. So I believe with this ABCD pattern that we're looking at, I think we're pretty good support here in this pound at 129.70. It's a 382 retracement. It equals the same break that we had back between the 11th and the 15th of January, but this one's taken 10 days, John. There's been a lot of people interested at this level, so they're being washed out just a little bit, but it's an ABCD right at a 382 retracement. Well, we're a little bit below. We're about 20 pips below the 382 retracement. We're setting right at the 50% of the January 15th low, but this is a low risk spot. In fact, Gartley said, buy the first ABCD pattern in a new bull market. Now, if you're assuming that 125 down there was a new bull market, this is it. This is the first ABCD. So that's what it looks like.
That's very helpful. Thanks for just laying that out. Yeah. So if I restate your words according to my filters, am I hearing you say it's a buy, risking 30, 50, whatever pips? And if you're not stopped out, you're targeting a rally back to 132, conceivably higher. Is that the idea?
Yes, that's for sure. And I would not use a 30 pip stop in this, because that's not even $200, and you've got to give it at least.
Right. Yep.
I would say at least 50 to 70 pips. $300 to $400 in these, because you're pretty active around these ABCD levels. So that's what I would. You're wrong if you get below 129. Let's put it that way.
Right. I see what you're saying. Very good. Yeah. Hey, listen, Larry. Thanks so much. We'll talk to you Thursday.
Oh, John, don't forget now, you promised to be on Thursday and Friday so we can talk about some of these delayed reports that we've had in the grains and stuff, and the big report we have Friday. So, but don't forget, put that on your calendar. You're going to be on the guest Thursday and Friday, okay?
Yes, sir. Very good. Talk to you then.
Okay. You bet. Thanks a lot. Mr. Z from the room, TFNN, has some wonderful trades in there for everybody, like most of the people in there. There's some really experienced traders in there and some really young folks, and they do a great job as far as, what we're looking at as, helping people with their trades and stuff. So if you're looking for some help, the TFNN Trading Den is really a good place, to take to get some information. That's the main thing. The Treasury bond, folks, we got down to some pretty good support at that 145 level. We've rallied up to 145.16, but let's just take just a moment here, because going back on what Gartley said, in fact, the low that we made today in Treasury bond, folks, right down there at that 144.25. Let's try it again. 144.28. The low was 144.29. That was an exact 78% retracement of the low back on the 18th of January. Just absolutely spot on. If I can be really quick here, I might be able to get this up here to see if it's going to get up into this area right here, and we'll see. Now, what we want to be watching now, because we are bearish, we want to see, since we got up to 147, we want to check to see what that 382 retracement is going to be on the way back up, and that comes in right around 145.24. So that's 7 ticks from where we are right now. So that's a key thing to watch, and if it doesn't get any higher than that, that will help confirm, that we're looking at something that is going to be, very, very interesting to see. Now, let's get back into a couple of things that someone they've been asking us about, because I posted that cocoa thing yesterday, and let's just put this up here again because they're asking me about it. That's not the one I want to see. Bear with me here, folks. I want to get the larger time frame on the cocoa, so we can take a look at. Here we go. We get this up here, and then we'll bring this in. We're going to look at coffee, cocoa, and sugar in here. Here's cocoa. Your guys almost got me tempted to trade this stuff. Well, there's where we were Friday, 21.74. The low yesterday was 21.68. It opened slightly lower, then rallied to 22.28. That's a very large move, as we can see on the chart that we already posted this morning that had a big range. We're trading about unchanged this morning, so it hasn't really gone anywhere past that, but that's a very important spot, to pay attention to. The next one we want to look at, of course, is the sugar, and we'll be switching over to July sugar this next week, and then from July we'll move over to October. And if we bring up the sugar, you'll see that we had really strong support down there at 22.40. We had a strong day yesterday. It's acting okay today, so that support is still in play, looking pretty nice. So we'll see what's going on. So we're trading at 21.94 in the cocoa right now. So that's held up most of the gain. That's a pretty good sign, I think. Well, that's my 10 cents for it. Like Mr. Z said, guesses are important, and boy, am I good at guessing. All right, let's look at the other one we want to look at is the cotton, because that's going to be one that is, where is the cotton? Are you kidding me? Oh, here it is. I've got it. Just a second here. This is another one that looks interesting from a longer term play. Let's take a look at the cotton here. Wow. Boy, time goes by. We'll be right back. 877-927-6648.
The universe provides us with opportunities all the time, and I was no different. In 2006, I invested $2,500 in a 2-day master trader course taught by Tom O'Brien, then ranked as the #1 market timer for gold. The fact is, if you want to be the best, you must learn from the best. Hi, I'm Steve Rhodes, author of Mastering Probability and the Market Timer of the Year for 2018. To celebrate this accomplishment, TFNN.com is offering you a free 2-week subscription to my award-winning newsletter service, and there's no charge to you until day 15 unless you cancel sooner. That's right, we're waiving the normal upfront deposit, and this offer is available to anyone and everyone, even if you've tried Mastering Probability before. Sign up now, and I'll teach you the tool that identified the bottom in the Dow on January 26th, the morning that led to the largest daily point gain in history. This offer will expire on February 10th, so go to the homepage of TFNN.com now and click on Mastering Probability.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and with any luck at all, we're going to have Stan Harley as our guest from Harley Stock Market Cycles tomorrow, Thursday, and Friday. We're going to have Mr. Z on from the room. John Cheveney is going to be here talking to us about these things that are going on in the grains as far as the reports that are coming out and how the market's reacting to it. there could be some really violent moves in these, and we want to be prepared to buy these grains if we get a violent move to the downside. That's one of the things that we're preparing. The last chart that I wanted to talk about here is Bitcoin. This is the cryptocurrency that people talk about. It's all about blockchain technology. We're down from 19,500. As you can see, we are forming that Gartley. We just completed it just a little while ago down there at that $3,300 a share level, and that's. I was wondering if people that went on an African safari 10 years ago that bought Bitcoin for $1, and they thought it was 3,300 today, how happy they would be until they saw the chart that it was 19,500. Well, it's going to be finding out whether this blockchain technology is going to have legs to stand on pretty shortly, because if we get below $2,900 a share in Bitcoin, that would be the largest correction that it's ever had in the 14 years that it's been, in the news. And of course, it was in the news a lot last January when it was trading at 19,000, and we're having it on sale this January at 3,300. So we'll see what's going on here. Okay, there's nothing reason to get frustrated, Dudette. I mean, these markets will give you plenty of chances. Just be patient. That's the main thing. Wait till, whenever you get these mornings, wait till you get out of amateur hour. That first hour, 45 minutes in the stock market is always tough. We've been open, for 24 minutes? It's always jumping around. So look to see what it's doing at 10:30. That's the best thing, because if it's 10:30, it's made a high. Then you have a handle to look on to put the stop above it. That's basically it. So we'll watch it really closely here. 877-927-6648. We'll see you all in the flip flop tomorrow. Hopefully, we'll have Stan Harley as our guest. May God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.